Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 1st. New month on the horizon. Let's see where it takes us. Don't forget to run the player at 1.5x. Taking a quick look at futures. Equities are sliding in the pre-market down about 0.75%. Oil up 4%, gold up 1.3%, copper up 1.6%, Bitcoin up 4%. Macro front, PMI and ISM manufacturing numbers this morning, construction spending. Also, we've got the State of the Union tonight by President Biden. Things I would listen for in that speech are hints about an SPR oil release, hints on a windfall profits tax on energy companies. That is already being circulated in Europe, and I wouldn't be surprised if they say something about that. Also, suspension of the federal gas tax that's imposed at the pump. Also, it's an outside chance, but energy stimulus checks, that's already going on in Europe. In the trading room, I posted that Japan is doing that. They quadrupled the energy subsidy checks that they send out to their population. Europe is already doing that. UK, I believe Germany and France are both doing that as well, energy stimulus checks. Also, you may want to listen for anything energy related in terms of LNG going to Germany from the United States, stuff like that, plus potential new sanctions on Russia specifically as it ties to energy. Now, over in the earnings front, Target reported a great number this morning. It's up about 13%. Sea Limited, Baidu, Domino's, Kohl's, AutoZone, After the Bell, SoFi, Plug Power, CRM Salesforce, Dutch Brothers, and Celsius energy drinks. Also, tomorrow morning there's Dollar Tree. So a lot going on the earnings front as well. I want to start off with the oscillators. I'm just going to show the NASDAQ bouncing up here to the middle of the range. You'll find the same to be true on the New York oscillator. Right here, they're not really predictive of anything. I am going to include them on the blog site this morning for you to take a closer examination. I'll also put the high-low charts there for you to take a look at that as well. So I will put some supporting information on that on the blog this morning. Moving on to TLT, you see that there's been a flight to safety. Of course, if you're buying bonds, you're driving down rates, which is making price go up. So I think what we got to be doing, if you're at all interested in bonds, well, one, you should just watch it. It is linked to the equity markets. We got price coming in here with a declining 50. Oh, I forgot to put on my pointer. We've got price coming into the declining 50 right here. You can also see that that's been a line of support here in the past going back. So now 41 will be resistance with the declining 50 and all these reactions along that line. So that may be a place, well, it's definitely going to be a pivot point, but it may be a place to start layering in shorts if you're interested in that, and then placing your stop right above the 50. If it breaks above the 50, chance it could go up here to 1 44. Moving on to gold. Gold continues to move higher. A lot of us are in that trade, either that or miners or both. You can see the weekly breakout from this consolidation triangle, wrestling right here with 179. If there's a pop above that, you're going to move up into the mid 180s, and then a target up here towards 193, which was the prior high. So gold continues to be on a roll. Stay long. Moving into the indexes, I think we're at a really, really important juncture. The title for my, for today's video is Mixed Signals, because yesterday we didn't do a whole lot. I mean, there was some volatility, but we really didn't go anywhere. And so the bulls will be saying, that's fine. It's a consolidation day after a big run up, which is true. And the bears will be saying, see, I told you, the rally died right at the 200. The bulls have lost power. And now that we're still below the trend line, ready for it to roll over. And of course, that's also true as well. So we're at a critical juncture, and just looking here on the chart, for the bulls to truly get going, a bounce is all well and good, but as long as you're below the 200 and below the downtrend line, you really got nothing. So I would be looking at this 4,400 area as being really, really important on 440 on SPY. And here you can see on the face of it, I mean, this looks really bullish. We've got an impulsive move off the floor and a bull flag. You pop 437.50, should send this thing flying, but we've got a fly in the ointment here with the downtrend line still above, so that's going to be resistance. A lot depends on how you want to trade it, whether you want to alarm this 437.50 area, alarm the 200, alarm the downtrend line as to when or if you want to take that long. If you're long already, I think you can stay long against this 432.50, which we've pulled back to here in the pre-market. So whether you want to get long on a breakout of the flag, or you want to be conservative and wait for a breakout of the downtrend line, I think that's a personal decision. One thing I will say, you don't want to see price lose 432.50, and I would definitely have that alarmed in your system if you're long, or if you want to take a short, because if you lose this flag, I think the probability increases that this whole thing at least pulls back into the 425 area, and we can see that flag really, really well here. And so breaking out above 438 on the face of it should be very bullish. We've got a gap to fill here, and we've got the 200 to take out as well. So if it can break above the 200 and then make a run up here, but you can see on a measured move basis, if we go on the assumption that bull flags fly at half staff and that this impulsive move is only half done, you can see that projecting this flagpole higher would put us all the way back up here. So I think that's within the realm of possibility. I wouldn't just assume that that's what this structure is just because of all the overhead resistance that I just pointed out on the longer term charts. But this certainly fits the bill for a classic bull flag with an impulsive move and then a relatively tight consolidation. One thing that would foil this flag is what I just said, losing this 432.50 and then, rolling back this way. That's gonna take this bull flag idea and just more or less invalidate it. Qs, very much the same thing except at different levels. We've been talking about that price has not only been below the trend line, which is going to be important technical resistance, but also below the 20, below the 50 in green, and below the 200. So there's a ton of overhead resistance there on the Qs. But here again, you've got a nice bull flag consolidation. I didn't draw in the flagpole, but you can see the impulsive move, then the consolidation for a day and a half, and now this 347.50 becomes the top of your consolidation. If we somehow gather ourselves here this morning and make a push above, or we get good news, or for whatever reason push above 347.50, I think you got to run up to this open gap, and then we'll need to keep track of, let's see where the 200 is. Yeah, the 200 is at 360. So yeah, it's not till way up here. So I mean, from a structure standpoint, I would say a back touch of the 200 would certainly be possible up here at 360, and that would align pretty well with a bull flag measured move. So I would certainly have 347.50 alarmed in your system, and I would also have 342.50 alarmed as well. You don't want price to roll back over there. And you can see this is just another visual representation of the flag on the 30-minute chart with this 347.50 and 342.50 being the high and low limit of this flag. Moving on to IWM. What I've done here is simply box in the double bottom. We had a bottom here. We had a bottom here with bullish divergence here. The posture of the RSI and the PPO were much higher, even though price was at the same level on the low. That shows underlying strength. We've gotten the bounce, and here's the classic W look. The left side, the middle, and then the right side. In order to get a breakout here, we've got to get above the declining 50, which comes in right at 207. So I think the top of the box here at 207, which aligns with the 50 EMA, is going to be very, very important. But downtrend resistance, 1 year resistance at 210. Those are going to be mighty, mighty strong resistance levels. And, you know, if it's going to fail, it's either going to fail to get out of the this double bottom setup, rejected here at the 50 at 207, or right here at 210. What would be very, very bullish is a break back in to 210 and then go up and fill that gap and break above the 200. That's a lot to ask. I'm not saying it can't do it. It can do anything it wants, but just the reason that I put in this $20 wide, because if you get a breakout above 207, the measured move is going to be $20. So that puts you at 227, right? 20 added on to 207, that puts you up here at this gap. So that would be, I mean, massive. So keep that in the back of your mind as you watch IWM. Here's the move off the low. We traded above the 2-hour downtrend line, so that's a check mark for the bulls. We've got this little gap up here runs from about 205 up to a little higher than 206, like 206.25, and then we've got that 50 EMA coming in at 207. So those are the important levels on the chart. And here I just colored in the little flag type structure. Moving on to FATMAAN. But before I do, I want to welcome new guests to the channel. I really appreciate you spending some time with me. I put a lot of effort each morning to set you up with actionable levels on the indexes and the FATMAAN names. Those names are the market. FATMAAN being 50% of the Qs and 30% of SPY. If you get those right, you get the market right directionally. So that's where I place my effort, plus trade ideas on most days. So if you're interested in that kind of analysis, please subscribe, hit the alarm bell, hit the like button, leave a request down in the comment section. That would be great. I'd be happy to look at any sector or specific stocks and work them up and incorporate them in to a video. That would be my pleasure to do that. So I encourage you to do that. And jump over in the show notes. You'll find a link to the blog site where you can drop in your email, register for all my content. You'll get an invite to our trading room, and then morning, noon, or night, wherever I send out market updates, observations, trade ideas, you'll get them in your inbox. And I want to welcome, we've had several new subscribers in the last couple of days. I want to thank you so much for joining us. We're glad to have you. And of course, longtime subscribers, thank you so much for sticking with me. I really appreciate it. Please pass the link along to others in your trading circle. Retweet the content to help me grow the channel. I really, really appreciate that. So on Facebook, I think you just have an alarm here at 215 on the high side and 195 here on the low side. And if you wanted to, take a midpoint there at 205, you'd be welcome to do that. I view this area here, though, as kind of in no man's land. I mean, we're in a void, technically, on the volume over price. You can see all the trading that's happened above. So I think this 215 line is going to be a tough nut to crack. But if it does, I think that's going to be very bullish and probably going to be indicative of some power in the QQQ if they're going after Facebook that hard to break it back into this area. You're probably going to see a lot of other FATMAAN names doing well. And remember, I don't really have it marked as such, but this was a trading range between 215 and 235. If you break above 215, the automatic target is going to be up at 235, just as if I had that boxed in. So that could be a pretty nice trade if you get long above 215, then put your stop just below. And if all of a sudden there's a big rally, I would not be surprised if Facebook found 235. So that's where I would have my alarms. Apple, very much the same kind of pattern that I showed you in the Qs. Also notice in black, I've got the Fibonacci retracements. So you can see that the top of the flag is right here at the 618 retracement level. So bears are saying, you know, here's your kickback rally. You're at the 618 retracement level. That's where a lot of stocks fail on the bounce. Bulls are saying that's a beautiful bull flag with a nice consolidation, getting ready for the next move higher. And of course, both those statements are right. So rather than guess which one actually plays out, what I would recommend you do is simply alarm 165.5. You get a breakout there. Your target's 167 and then 168.50. And then actually the measured move, if it actually plays out, will send price way back up here. On the low side, I would mark the level of the old gap right here at 163. If you see 163 fail, good chance it's going to roll down to 159 for starters, just back to the bottom of the box, and then probably open the door to lower prices. If Apple makes it all the way down to 159, I can almost guarantee you that the Qs as a whole are selling off, and you're going to be having downside alarms on all your other stuff as well. Tesla had a nice day. Nice from the standpoint, rocketed up and then consolidated the rest of the day and is currently trading north of the 200. And if you've been with me for the last few days, we were talking about that being a nice toggle point for swing traders. Okay to be long above and okay to be short below. Well, yesterday we broke above and Tesla held it. From here on, I would use 880 as your high pivot point. And if it can break 880, I see this 915 or 905 area first, and then 935, 940 second, and then a break back above this big line here above 935. You'd be looking at 970, and you can just visualize the measured move. That's where it projects to. Not saying it always has to go there, but it's nice to have those visual targets in mind once you get the breakout to kind of know what you're shooting for. So I think there was a couple of upgrades yesterday, if I'm not mistaken. So that might have been part of it, but it doesn't really matter why. Just a really nice day for Tesla. Nice day for Microsoft as well. really spent a lot of time pinned here below this open gap down around 297, but then final bar of the day popped through. I think today what you're really focused on is 300. If price can take out 300, I think you can get a pretty fast move up to 306, and you can see that there was a line of reactions along that level. And you can also see down here at 300, resistance, 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 support, support, support. So 300 is a big line in the sand for Microsoft, and that's where I would have your attention focused today. Amazon, consolidation day. I would put your alarm at 3075 and 3030. I think that those are the levels of interest. I think if you pop 3075 and manage to get through 3100, I think you can easily go to 3150, even 3200, based on the structure, based on where the overhead resistance lies. So I would definitely, if you're interested in Amazon, have alarms at 3075 and 3030. And don't forget, if you want to be long Amazon and you get a pullback to the bottom of the box, you can get long down at the bottom as well. So, as long as it holds, that even gives you a better entry where you can put your stop just below 3030. Maybe give it $10 or whatever you feel comfortable with, and then see if you get even a bounce back to the top of the box would give you a winning trade. And then if you get the breakout, that will it'll all be gravy after that. Google, same structure, same consolidation pattern. I would be homing in on like 2705, right in that area, and 2026. What was the low? Yeah, it says, back here was 2650. I think you can put your line at 2655, something like that. But you can see the nice move and then the consolidation. I would treat it just like the other flags. If you're interested in trading it, or just interested if you're trading other FATMAAN names, what I like to do is I like to alarm them all. And so if say I'm in Apple, but I have all the other FATMAAN names going off, and I hear Microsoft go off, and I hear Amazon go off, and I hear Google go off, and I hear Tesla go off, that's going to give me confidence that even if Apple is dragging a little bit, that it will respond. Now, if I'm in Apple and I see downside alarms going off all over the place, that's probably going to be a warning flag to me that, Apple is not probably going to go up by itself in a market like this. It's going to flow with the market. So that's part of the strategy of having these big market moving names all alarmed, is that you don't have to trade them all, but if they're all going down, you can short the Qs if you want, or go on the long side. If you start seeing all the FATMAAN individual names break higher, you can just get long the Qs. So those are little strategies how you can use these levels to trade something totally different, or have it inform the trades that you are in. Netflix, we got the double bottom like we've seen other places. Now we're back up in this trading range between 387.50 and 410. I think on this one, I would alarm 400. I would alarm 410. It depends on how aggressive you really want to be. I think a good trade would be simply do nothing until you get an alarm at 410. And the reason that I say that, you see that there's a lot of congestion, a lot of trading that has happened down in this area, and that to me means chop. And you can see it, all this choppy trading in here. You can't really make money on Netflix trading in a $15 range. The options are just too expensive. But notice what happens on a breakout above 410. The chart really opens up, a relative void on volume over price. Just had this run here. So on a breakout above 410, I would not be surprised to see a $50 move back up to 460. And that's something where you could really make some hay on your options to get long on that breakout and see if you don't get a fast move back up to the prior high. And then at the point where you reach the gap, then you can roll higher or stay put in your long, depending how long it takes to get there. But I think that's your big trigger level on the high side on Netflix. And then of course on the low side, we've already talked about, if you break below 360, you're going to get more sellers. But also notice here, if price rolls over down below that 387.50, you do have pullbacks in volume over price support. So if you roll over at 387.50, I wouldn't be surprised if you came down to 370 and 360 fairly fast if the market is rolling over as a whole. Semis. Pretty wide range here from 262 to 270. I think if you got a pullback to 262 that held, I think you can be long there. I would be worried if it lost 262. That probably means the whole thing is rolling over. So you've got a number of levels here where you can take shots. 262 or 266, looking for moves to the top of the box. A break above 270, I think you can definitely be long, looking for 274, and then a gap fill up towards 279, 280. I like that trade. But if you get a little move above 270 and then it comes back inside, I would be very worried about that, because remember, going outside the trading range and then coming back inside is bearish, and then your target would be 262. So you just got to stay on your toes in this market. And if you do take a breakout at 270, just make sure you have your stop alarmed and then you honor it if for some reason price comes back inside. But I think SMH still looks productive, especially if you can get a breakout at 270. Just want to wrap up with a couple of additional charts. A lot of us are in DBA. A lot of us were heartbroken just the other day. This is, there was a spike across the grains. I mean, this is an aggregate ETF that has a lot of stuff in it, and I've been kind of frustrated with how this has been trading, because you'll look in a day where wheat, corn, and soy are up 4%, and then you look at DBA and it's up 1%. That's frustrating. So, I mean, it is what it is. I'm still long. I looked this morning and it's higher by about 25 cents. So, manage this trade, and if there's a war-induced big spike, something like this, you might want to manage your trade and take profits on that, because we are in April 21s. I've got some also longer dated into the summer, but there's one thing I heard on the news is that summer wheat planting season in the Ukraine is in 6 weeks. And if this mess is going to go on over in the Ukraine for 6 weeks and it screws up their planting season, God knows where wheat could go, because they are a huge producer. I think they're number either number 2 or 3 in the world in wheat. And if they can't get their crop in for the summertime, like I say, God knows where that price could go. Notice PENN Gaming. Of course, it has fallen apart, but now coming up, recapturing the 8, 20, and 50. And then we've got a line of resistance here at 52 with a void in the chart that could open up to 58, 59, or even a run to back touch the 200 here at 62. I think it bears worth watching. And if you get a breakout and you're a nimble trader, I think you could take that trade. Dollar Tree, they report tomorrow, so I'm not saying jump on this one, but I would have 142.50 alarmed after a big run up and a long consolidation. If they report good numbers, you might see a little gap up tomorrow, or big, whatever happens. But after having had this long consolidation, if they do have a gap up, then I think there's a good chance that this could keep on going to the upside, having already consolidated all this action here over the last 4 months. So keep an eye on Dollar Tree. A lot of us are in tech resources. Been a little frustrating. Gets close to breaking out. Then it drops 2.5% yesterday. Was down as much as 5%. I have no idea why. I mean, copper, coal, gold, everything that they do is heading north. So I really want to see this break out above 37. But we are in March expiration. I think we're in March 36s. It's got to get going or we're going to run out of time. So be aware of that. We talked about steel yesterday. VALE continues to do well on recovering. And then we talked about a number of steel names. They all did well yesterday. Steel Dynamics, we talked about. It was up to 28. So, lot going on. Stay on your toes today. Don't get married to bullish or bearish. This is a time of maximum flexibility where you've really got to have that mental edge of being a leaf on a stream. A leaf on a stream doesn't care which way the river flows. It's going to flow right along with it, with not a care in the world if it goes left or right. And that's the way we've got to be right now. We've got a lot of potentially bullish setups. But right along with that, we've got overhead resistance and news flow that seems to be more bearish than bullish. So those kind of events can overwhelm even the most bullish technical setup. So stay nimble, reduce position sizes, and reduce the number of positions that you have in this high vol news-driven market. So I hope that helps. I'll be in touch today if I see anything noteworthy or important to pass along. You'll be the first to know. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.